Hello folks, this is Rich Paul from Richard W. Paul & Associates with an educational economic update for February 2017. In this month's video, we'll discuss some of the major headlines that influenced markets in January and provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Do you remember where you were this time last year? In January 2016, the markets were in a slide and filled with volatility. In fact, fears about China's economy contributed to the S&P 500 and Dow experiencing their worst ever 5-day beginning of a year. However, 2017 is off to a different start. This January, we saw the three major domestic indexes reach record highs, and the Dow surpassed 20,000 for the first time ever. Right now, we're also well into the corporate earnings season, and many reports are beating expectations. As of January 31, blended earnings were up 7.1% in the fourth quarter, and revenue increased approximately 4.2%. Despite this positive data, the economy still has opportunities to improve. In January, we learned that gross domestic product for GDP lagged in the fourth quarter of 2016, showing 1.9% growth compared to the third quarter's 3.5%. As of this first estimate, real GDP still lagged for the year, increasing by a total of 1.6% for 2016. If you look more deeply at the numbers, however, you'll see that many aspects of our economy grew in the fourth quarter, including household purchases, business equipment spending, and inventory accumulation. Instead of the lagging numbers showing a widespread slowdown, one area is largely responsible for decreasing growth, and that is net exports. In the fourth quarter, we saw a jump in imports and a decline in exports, which combined to pull growth down by 1.7%, the biggest drag since 2010. This is an incredibly important part of our economy, as the most recent GDP report shows any change in the balance between imports and exports can affect growth. In fact, without the decline in net exports, fourth quarter GDP could have beaten third quarter measures. As you're surely aware, we're currently in the middle of a hotly debated, headline-grabbing political environment. And some of the key conversations impact trade, from taxing Mexican imports to restricting visitors from certain countries. These new policies and the reactions from the nations they affect could change the balance of American imports and exports, and thus our economy. Of course, we're not political prognosticators, we're financial professionals. So while we continue to closely watch new policy developments, our focus remains on market fundamentals. Throughout 2017, we'll analyze the economy's underlying health and strive to find new ways to pursue your goals in a changing environment. As always, we're here to help you understand what's happening, no matter the headlines. That's it for this month's Educational Economic Update. Once again, this is Rich Paul with Richard W. Paul & Associates signing off for the month of February 2017. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 248-305-9911. We're happy to talk.